but you've got about 40,000. So people understand, I mean, they know your hotels, they see them in the U.S. and around the world, but you've got about 40,000 employees of those hotels, not to mention your corporate workers. I understand about 70% of those hotel employees by franchisees have had to be furloughed.
That's absolutely correct.
Where does this industry stand even a year from now? Do you envision a future in the near term where you can get even back to full employment?
Yeah, basically we're truly 100% royally screwed. The best term I can think of to describe this whole thing is cluster. And not only is it going to take a long time for hotels to get back to where they were, if they ever will, which I don't think they will, a big chunk of most hotels, or big hotels, revenue is from events. And we're not going to have these, big old Tony Robbins events anymore. Yeah, we're screwed.
Yeah, no question. So you met and spoke with the president back on March 17th, and you talked to him about the need for capital and liquidity, and this was before the PPP program. And I just wonder if you think that the PPP program solved the problem you were explaining to the president, or if you agree with Mark Cuban, who tweeted yesterday, quote, "It's time to face the fact that PPP didn't work. Great plan, difficult execution, no one's fault. The only thing that will save businesses is consumer demand." Is he right?
Yeah, Cubes is spot on. It was only a plaster on a gangrenous wound. The PPP or even the furlough scheme in the UK, it's just a massive kick the can down the road. They got Johnny Wilkinson in, he smashed that can down the road, and come October, when it ends in the UK and whenever it ends here in the US, we're going to see unemployment shoot through the roof. And unfortunately, the Fed is going to have to do something else. They're going to have to print like crazy. And yeah, it won't be long until we see helicopter money. And yeah, I spoke with the Donald, and the Donald agrees with me. And he's just going to have to, well, he doesn't really care at the moment. He just wants to get re-elected. But yeah, we're going to have to do something, and I think eventually we're going to have UBI, Universal Basic Income. Some legend in the UK called Siam Kid has been talking about UBI for a long time, and it looks like he's going to be bang on the money.
Wow. Well, that's a scary thought. That's a scary thought. That's a scary thought. That's a scary thought.
Hey boys and girls, I'm back here for another dose of doom and gloom, another macrometrics video, because rising stock prices is not an indicator of economic health. And yes, as you can see here on CNN, 1 in 4 hotels can't pay their mortgages. And when you read into this a little bit, it's quite scary, because it says, well, it shows the percentage of hotel loans 30 days or more delinquent is 23.4% as of last month. The highest on record, and when it's normally 1.3%. That's a massive increase. That's many orders of magnitude of an increase. And the whole article basically goes on to say that commercial mortgage is screwed because hotels and shopping malls can't pay their rent. So yeah, it's looking grim. And I think 1 in 4 can't pay their mortgages. I think that's probably quite generous. I think it's probably a lot more. And when you look at the smaller hotels, I mean, like as in Americans say, mum and pup type ones, it's going to be a lot worse. Small businesses are getting hurt a lot more, whereas big ones, like like I demonstrated, highlighted in other macrometrics videos, they're all getting massive bailouts by the Fed or by the government, etc. So yeah, that's one article which I thought was pretty damning. And here's the other one, American Airlines. They're looking like they're going to cut 19,000 jobs, which is nuts. I mean, I've said for a long time, travel, hospitality, all that sort of stuff, they're screwed. There is no return. So yeah, 19,000 jobs in October. And remember, when you're hearing of these job cuts, it's not just, oh, the business is going to get screwed. That's 19,000 people that won't be able to pay their mortgage, their rent. That's 19,000 people that won't go shopping, buying clothes, doing normal stuff. And as we all know, if we jump onto a little Microsoft Paint here,
this whole thing is about money velocity. So let's call it MV. And at the moment, what's happening is that MV is falling off a cliff. And the reason why they're having to print like this is because of MV. Velocity is going down. People are not buying stuff. People are not transacting. And so everything grinding to a halt. And the only way they can try and kickstart that is by pumping in liquidity. Let's just call it printing. The printing press. And so, the reason why this cannot go on forever, I mean, they can print, $100 quadrillion, but it doesn't make a difference if MV is like zero. What is the GDP of, something where there's no transactions going on? Is nothing. So this is the reason why I'm positive that this is all well and truly screwed. And when you look at the Federal Reserve's own data, when looking at the velocity of money, look what's happening. We have literally just fallen off a cliff. And so that is why they're trying to kickstart the economy. We have flatlined. This is what a flatlining economy looks like. We're just lying face down in the water. However, when you look at the charts, if we just bring in the mothership over here, let's look at the daily chart. This is what's happening. So we're having everything falling off the cliff, delinquencies through the roof, people losing their jobs, yada yada yada. But what does the stock market do? The stock market posts new highs. We are now well and truly above pre-COVID highs. So this is the highest the S&P 500 has ever been. If we look at the NASDAQ, it's the biggest joke I've ever seen. Look, that's the pre-COVID high, and that's what it's done now. This is so uniform in its structure and in its trending that, I mean, I've been trading for 16 years. This is pure manipulation. I've never seen anything like this. And so this is why there's a massive disconnect. What's happening? Again, here's the Dow Jones, almost at all-time highs. So to me, what this looks like is basically everyone got caught with their pants down, all the billionaires, everyone, Wall Street, etc. And so they're like, Powell, let's prop things up. We need to get out. And so what's happening is they're doing the suckers rally, the massive stim pump, and it's just looking horrendous. So what's happening is, I reckon, a whole bunch of billionaires and Wall Street, they're exiting their stocks, they're exiting, etc. Whilst they're going, hey public, look, all-time highs. And so the public in general, at least 80% of them haven't got a clue what they're doing. They're just going to Robinhood or picking up some sort of mobile phone app, stockbroking thing, and they're just buying Apple, they're buying Tesla, willy-nilly. They don't know why they're doing it. They're just, stocks are rising, I'm missing out. Meanwhile, history has shown this a million times that the big money is just going to get out. So and then so that is, I guess, my daily dose of pain for today. What does this mean? This means at some point the markets will roll over. Now when we look at, so here's the thing, I think the FTSE, the UK stock market, is the canary mine. I've said this for a while now. So the Bank of England isn't stim pumping as hard and heavy as the US. And so what's happening is that whilst everything is going up, I mean, if we just superimposed the S&P with this, come on, S&P 500. So the US stock market has just continued to rally, but the UK stock market hasn't. I guess we're more of a services, hospitality type, tourist type country, and we're getting hit hard. But this looks very weak to me, very weak. And so this is a big old support level here at this 6,000 level. And when a support level gets smothered, it tends to break. The more times the level gets hit, the weaker it becomes. A bit like skipping a stone. So when you wang that pebble across the water, it skip, plop. It loses kinetic energy and falls through the water. Same with charts. So it's interesting. I'm not making any big plays at the moment because I guess when this rolls over, oil will roll over, gold and silver will roll over, crypto will roll over. It'll take everything with it for a while, and then we'll have a disconnect. So personally, I'm eyeing up oil. Oil is looking so well and truly propped up. It's ridiculous. We've got some big coiling. So here, this blue stuff over here, that's the S&P 500. And what you can see here is coiling. So coiling is like, so the market's being compressed, so like a spring. So the market's being squeezed like a spring. And whenever you see coiling, you see an expansion. And this is looking like what I call a pincer movement. So this, the move is down from this particular direction, especially when you see a rising pinch or a rising compression in a rising market. The normal, 8 times out of 10, it's going to be popped to the downside. But yeah, this I think a very clear target when everything starts to roll over, when everything starts to tumble. I think, I'm saying this today. I think $20 is a very easy target. So I'm getting prepared to short the shit out of oil when the time comes. So
I guess the little caveat there is if a hot war kicks off, like nuclear war kicks off, then oil will spike, but that's highly improbable. That's all I have for you for now. Have a great weekend, look after yourself, and just continually remember, rising stock prices does not equal economic health, and it's there just to fool the public.